Fourth, recently there was an unprecedented outage globally which affected businesses in many countries. The outage demonstrated how minor technical change, if it goes haywire, can wreak havoc on a global scale. It also showed the fast-growing dependence on big techs and third-party technology solution providers. In this background, it is necessary that banks and financial institutions build appropriate risk management frameworks in their IT, cybersecurity, and third-party outsourcing arrangements to maintain operational resilience. The Reserve Bank has time and again emphasized the importance of robust business continuity plans, that is BCP, to deal with such incidents and situations. Now I would like to focus on the external sector. India's current account deficit moderated to 0.7% of GDP in 2023-24 from 2% of GDP in 2022-23 due to a lower trade deficit and robust services and remittances receipts. In the first quarter this year, that is in the first quarter of 24-25, merchandise trade deficit widened as imports grew faster than exports. Buoyancy in services exports and strong remittance receipts are expected to keep the current account deficit within sustainable level in Q1 24-25. We expect current account deficit to remain eminently manageable during the current financial year. On the external financing side, foreign portfolio investors are turned net buyers in the domestic market from June 2024 with net inflows of $9.7 billion during June-August, that is till August 6, after witnessing outflows of $4.2 billion in April and May. Foreign direct investment, that is FDI flows, picked up in 2024-25 as gross FDI rose by more than 20% during April and May 2024, while net FDI flows doubled during this period compared to the corresponding period of the previous year. External commercial borrowings moderated during April-June in the current financial year, while non-resident deposits recorded higher net inflows during April-May compared to the previous year. India's foreign exchange reserves, this is something worth noting, India's foreign exchange reserves reached a historical high of $675 billion as of August 2nd, 2024. Overall, India's external sector remains resilient as key indicators continue to improve. We remain confident of meeting our external financing requirements confidently. Now, there are certain additional measures. There are 5 of them, and I would like to announce them quickly. First relates to public repository, that is creation of a public repository of digital lending apps. The Reserve Bank has taken several measures for the orderly development of the digital lending ecosystem in India. As a further measure in this direction and to address the problems arising from unauthorized digital lending apps, the Reserve Bank proposes to create a public repository of digital lending apps deployed by the regulated entities. The regulated entities of RBI will report and update information about their digital lending apps, that is about the digital lending apps whose services they are availing in this repository. This measure will help the consumers to identify the unauthorized lending apps. The next announcement relates to frequency of reporting of credit information to credit information companies, that is CICs. The availability of accurate credit information is vital both for lenders and borrowers.